Donald Trump is back in the White House. His return marks a dramatic shift in U.S. trade policy. On April 2, 2025, just one day after taking office, President Trump announced sweeping new tariffs. These tariffs target goods imported from around the world. They include a hefty 25% tariff on imported vehicles and auto parts. Tariffs on steel and aluminum also returned. These tariffs have sent shockwaves through the global economy. They are having a significant impact on many industries. One industry feeling the heat is insurance. The tariffs are driving up costs for insurers. This is leading to higher premiums for consumers. Auto, home, and health insurance are all affected. Insurers are also grappling with market volatility and global uncertainty. The tariffs have been met with mixed reactions. Some argue that they are necessary to protect American jobs and industries. Others contend that they will harm the economy and hurt consumers. The insurance industry is closely monitoring the situation. They are adjusting their policies and practices in response to the changing landscape. The impact of these tariffs is likely to be felt for years to come. It remains to be seen how they will ultimately play out. However, one thing is certain, the insurance industry is in for a bumpy ride. The tariffs are already having a noticeable impact on auto insurance premiums. The 25% tariff on imported vehicles and parts is a major factor. This tariff has increased the cost of repairs. When repairs are more expensive, insurance companies have to pay out more in claims. To compensate for these higher costs, insurers are raising premiums. Auto insurance premiums were already on the rise before the tariffs. They increased by 12% in 2024. Now, experts predict that premiums will rise even further in 2025. Some estimates suggest that the tariffs could add over $11 billion to U.S. auto insurance costs this year. The tariffs are also affecting the availability of auto parts. Many parts are imported from other countries. The tariffs have made these parts more expensive and harder to get. This is leading to delays in repairs. Some car owners are having to wait longer for their vehicles to be fixed. The tariffs on steel and aluminum are also contributing to higher auto insurance costs. These materials are used extensively in car manufacturing. The tariffs have increased the cost of these materials. This is pushing up the price of new cars. As new cars become more expensive, the cost to insure them also goes up. Homeowners are also feeling the effects of the tariffs on their insurance premiums. This is mainly due to the tariffs on building materials. The tariffs have increased the cost of lumber, drywall, appliances, and other materials used in home construction and repair. When these materials are more expensive, it costs more to rebuild or repair a home after a disaster. Insurance companies are factoring these higher costs into their premiums. Insurify, an insurance comparison website, estimates that the tariffs could lead to an average premium increase of $106 per year for homeowners. The tariffs are also affecting the cost of home repairs. If a homeowner needs to replace a roof or siding, for example, they can expect to pay more for those materials due to the tariffs. This can lead to higher out-of-pocket costs for homeowners, even if they have insurance. The tariffs on building materials are also contributing to a shortage of skilled labor in the construction industry. As the cost of materials rises, contractors are raising their prices. This is making it more difficult for homeowners to find affordable contractors to do repairs or renovations. Section 4. Health insurance on the horizon. While the immediate impact of the tariffs on health insurance premiums is less clear, experts believe that increases are likely. The tariffs on imported medical equipment and drugs could drive up healthcare costs. Hospitals and other healthcare providers rely on a wide range of imported equipment and supplies. These include everything from surgical instruments to MRI machines. The tariffs are making this equipment more expensive. The tariffs are also affecting the price of imported drugs. While many drugs are manufactured in the United States, a significant portion are imported or use imported ingredients. The tariffs are increasing the cost of these drugs, which could lead to higher prices for consumers. It's still too early to say how exactly health insurers will respond to these rising costs. Some may choose to absorb the costs in the short term. However, many are expected to pass on at least some of the increases to consumers in the form of higher premiums. Section 5. Global insurance impacts. The impact of the tariffs extends far beyond the borders of the United States. The global insurance industry is interconnected. What happens in one part of the world can have ripple effects elsewhere. The tariffs have created uncertainty in the global economy. This uncertainty is making it more difficult for insurers to assess risk. As a result, some insurers are scaling back their operations in certain markets. Others are raising prices to compensate for the increased risk. The tariffs have also led to retaliatory measures from other countries. The European Union, for example, has imposed tariffs on a range of United States goods in response to the Trump administration's tariffs. These retaliatory tariffs are further disrupting global trade and creating uncertainty for businesses and insurers. The tariffs are having a particularly significant impact on reinsurers. Reinsurers are insurance companies that provide coverage to other insurance companies. They play a vital role in the global insurance market by helping to spread risk. The tariffs have made it more expensive for reinsurers to do business. This is leading to higher prices for primary insurers, which are ultimately passed on to consumers in the form of higher premiums. Section 6. The road ahead. The tariffs are reshaping the insurance industry in profound ways. They are leading to higher premiums for consumers, creating uncertainty for businesses, and disrupting global trade. The full impact of the tariffs is still unfolding. However, it is clear that the insurance industry is facing a challenging environment. Insurers are responding to the tariffs in a variety of ways. Some are adjusting their investment strategies to reduce their exposure to risk. Others are lobbying the government to reconsider the tariffs or to provide relief to businesses that are being harmed. The tariffs are a reminder of the interconnectedness of the global economy. What happens in one part of the world can have far-reaching consequences. The insurance industry is on the front lines of these changes, and it is adapting to the new reality.